everyone reads the S&P 500 the wrong way. I understood this when a subscriber asked me, if the market is so bad, why is the S&P 500 still going up? Well, let me explain. The S&P 500, or more commonly known as SPX in trading understanding, is the 500 most profitable companies in the USA. These include such names as Google, Facebook, Nvidia, whole bunch of companies. If we look recently, we've had a dip, but the dip in the grand scheme of things is very, very small. Let me show you. If you look at the run of the S&P 500, it has been parabolic. Yeah, we've had some levels of dip, but the growth is always up. Now, why is the growth always up? What is this understanding, and why investors keep pushing this thing forward? Well, it comes down to one very, very simple thing. The S&P 500 isn't showing today's market structure and today's effects. These investors, these people that invest in these companies, are looking for future investments, future gains. So what is seen here is an indication of what might be happening in the future. It's the worry of the future, not the now. Because look, now things are bad. Things are not growing. Things are not at the best place. Inflation is high. There are issues in the market, tariffs, whole bunch of stuff. And what you need to understand is that if this starts dipping now, then the future is the problem, not the now. This is the funny aspect of the S&P 500, and why this might continue on, why this might go on higher and higher and higher, is that even if the economy gets bad, even if things go down really horribly, growth goes, unemployment goes, everything is at the worst case, the Fed will start just quantitative easing and reducing rates, and that will ultimately increase the S&P 500. This is the reason why sometimes there is no real proper correlation to what this is and what the market does. What this really is affected by is interest rate cuts or hikes. That is it. That is the fundamental effector of this. Will there be more money in the economy or less? Will countries have access to ease of financing or less? That is it. That is the fundamental aspect of all this, and that's how these markets grow. So once you have that understanding, you'll know that, of course, there are far more intricacies and whole factors to this, but the main driver of all this is that this is how it is. Even at the COVID dip that we saw here, what happened afterwards? A massive 40% rise. So this is what people understand. When they see this dipping and they see that the market and the Fed, and they know the Fed will react to it, this is how it goes. There's actually a saying called investor tantrum. Sometimes investors will do this on purpose, tanker the S&P 500 on purpose to get the Fed cutting. Don't forget that. Anyway, I'm Alvarez, a seven-figure crypto investor. Like, follow, share, and hope this helped you.